Well, this is Neil. Simpler trading, simpler futures mainly, usually, but simpler trading. And today is a an AMA. Ask me anything is the idea behind today. We're broadcasting through Recast out to YouTube also, and so if anyone there has any questions that you'd like for me to look at, I would be happy to as soon as I figure out where the questions are on the recast, actually. Chat. There it is. So if anybody in the YouTube space has questions, I've found the chat, and so you're welcome to ask me from there as well. Also broadcasting in the simpler trading, what we call training room. And so let me have an idea of any questions that you may have from there as well. So that's what we're doing today. First thing I see, JC says, your thoughts on the ES for the remainder of the week. Okay, so not really a technical question, but a question where I think maybe I can introduce some of my normal thought process and some technical analysis in answering that very question. All right, so here's how I'm going about that. I come in this morning from observing that was last Friday's trade, right? That was the last thing that we had to look at prior to today. I noticed on Friday of last week, the session prior to this candle that you see on this daily chart right here, I noticed on Friday of last week that we made a high for the move on what I call on selling. I refer to that candle. Some would call it in market profile, you would call it an excess, i.e., or a throw over top, or think of it like this. I call that a high for the move made on selling. What do you mean, high for the move made on selling? How can you make a high on selling? Well, early in the day, reached up. It found what was that day's R1, level R1 at 60 and some change, 60 and a half, I believe it was, and immediately started to sell off from there, finishing on the lows for the move. Trying higher, rejecting the highs, trading all the way down to and closing out on the lows. So it's not a guarantee, but many times you'll observe that that's actually a sell side setup for me. Okay, that's a sell side candle. It requires a trigger in order to actually fire off a trade. A trigger is the breach of the low of a throw over top candle. So, but I'm looking at that anyway, nonetheless, before coming in today, and I'm saying, okay, Friday was an excess high with a weak finish. And so that very well could, don't know, but very well could prove to be a high for the next at least several few sessions, may very well be a high for as long as we happen to, I don't know, for a long time. I don't know. So furthermore, I'm now looking at, all right, well, prepare for the day and for the week. What are we looking at? I've got Bank of America and Goldman Sachs on Tuesday. I've got Tesla and Netflix with retail sales and housing data on Wednesday, with an Taiwan Semiconductor on Thursday. Nothing really to speak of on Friday, but that takes us into next week, where we have an FOMC announcement, where recently Fed Waller said that we need at least two more rate hikes before the end of the year, this year, one of which is 96%. We can go to the CME's website and look at the Fed Funds Watch tool there and see what the market has priced in with real money, not opinion, money, pricing in a 96% likelihood of a 25% uptick on the rates next week on Wednesday on the 26th. There is no meet in August, but there is another one in September. And you can go out and look on that and see how high the probability is priced in for that one to be the second rate hike before the end of the year. But right now we're thinking two more rate hikes before the end of the year. Additionally, I happen to know that the first half of July, historically, per the Stock Traders Almanac, is incredibly bullish. It's one of the two best week performing periods of the entire year, in fact, and it's very widely accepted and regarded and anticipated as being bullish. We talked about that at the beginning of the month, that should last for, if historically holds true, 2 weeks, running into the middle of the month, which is now. And so let's go review that. Well, as of close of business on Friday, the S&Ps were up 17.5% on the year. The NASDAQ, considerably more than that. In fact, the NASDAQ last week tacked on 453 points, or 3.3%. The S&Ps tacked on 106 points, or 2.4%. The Russell, 66.5 points, or 3.56%. And the Dow, 774 points, or 2.3%, while the VIX slid 10%. The S&P's 17.5% year to date was at one point off as much as 10% from their February highs and 27% from the all-time high, having now regained approximately 75% of the total losses from the all-time high to the October lows of 2020 or 1, whatever the low was. I guess it was last year. So if you take all that, and by the way, Chinese GDP and industrial production came in soft again consecutively, looking at I don't know how many in a row that is, but it's several. And by any measure, normally when you look at what is a recession, until this year, miraculous, we've just decided to change the definition. I don't know how or why or who decided, but somehow all of a sudden now this year that we had 2 consecutive negative GDPs, which is 2 consecutive negative quarters of growth, all of a sudden now that's no longer a recession. But China is in the middle of that, so maybe they are too, if you're allowed to say that. So I come in this week and I say, okay, what is really on the plan, on the docket, if you will, for this week? Well, the answer is not much, really. You got some bank earnings, but we had some of that last week to kick things off with JP Morgan and Wells Fargo. This week, we've got Bank of America and Goldman Sachs. If you looked at the JP Morgan and Wells Fargo numbers, you'd probably anticipate that Bank of America and Goldman Sachs are going to come in with some decent numbers, and they probably will. But it doesn't mean that the institutional side won't sell into good earnings, because they certainly can. Historically, it's accurate to say that the highs for July are in at the mid-month. That is the 16th to 17th. That's right now. Okay. With the throw over top excess on the high for Friday. So frankly, what did I? Oh, and one more thing, by the way, I also came in this morning and said, okay, what about this right here? What about the expected move as priced with real money by the options chain? Not my opinion, just reporting the facts. So I have to bring the receipts. The facts are the options chain has priced in for this week, a big whopping maybe 45. Let's stretch that a bit and call it 50 points. We're stretching it, calling it 50 points. That's a 100-point range. That means plus or minus 50 points, and I'm stretching it, okay? So that's 100 tip to toe stretched. So, and that's obviously on some incredibly low IV at 12.6%. Why? Because it's going to pick up next week during the announcement, during the Fed announcement, but not right now. So, what does all this say? What am I trying to say? I'm trying to give you not a technical analysis read on, although I do have some of that for you. Not so much a technical analysis read on what would be the answer to what am I looking for this week, but largely to say in all of that, if the information, the next real round of information is next week, and it's not this week, but what we know this week is going to be Bank of America, Goldman Sachs, Tesla, and Netflix on Taiwan Semiconductor with some retail sales, and that's a little bit of housing information in front of a Fed decision next week with low IV. The overnight last night had 130,000 contracts traded on 11. Let me repeat it. 11 points of range last night. 11. That's at least half or less than half the average overnight participation on either volume or range as observed on average, right? And so, in other words, it's saying that we really don't care about much of anything right now. So given all of that, that's the way I do go about looking at how to get a feel for what I would think about, how to prepare for, planning for. The price is going to take care of itself. But in coming up with an idea of how to approach the week, whether I want to sell iron condors or try to, buy calls or puts or something like that, I would not anticipate much this week. In fact, I would say that as long as the high that excess, because it's an excess, the high that was in on Friday can be the high, and we finish on a lower high today, then we have ended the one-time framing up and may very well, it's gone to neutral today. It's gone to neutral, provided the rest of the day does not provide a higher high than Friday's high. Then what I'm saying is true, and that is that we've ended the one-time framing up, gone to neutral for an opportunity to start one-time framing down as of tomorrow, Tuesday, which would require that we finish tomorrow with a lower high than today's high, at which point we have gone to neutral because we're still one-time framing up on the weekly, but now down on the daily, which means we're in neutral mode, as I would anticipate. Honestly, that's what I'm saying. The end result here is neutral because we're waiting for the next meaningful piece of information, which in my opinion is not this week. Another thing, this is technical analysis actually, is that here's your higher highs on price and lower highs on MACD. So we've got a negative or bearish divergence in the MACD on the daily. And if I took the time to put an RSI on there, you would see that the RSI is actually overbought at 70 plus. So if you want to know what I think, but I have no proof yet, I think we could easily top out here and start to come in some. But if you want to know what my evidence is, then I have to point to what I just said, and that is we're up 17.5% on the year right now in July on what is, by the way, historically average 16% markup in the year following a bear market last year, because last year was down as much as 27%, which was at least 20% off the highs, which qualifies for a bear market, which meant that we were in a bear market last year. So if you look historically back in time, what you'll find is twofold. One, the year following a bear market is average plus 16%, and two, it's also average plus 10% over the January effect, which coincidentally this year was 6%. We're at 17.5 right now, and it's only July. So that's the answer to question number one, the best I know how to answer it. And I went short today. How about that? So from right about here, actually a little lower than what the current price is right here. And so that's how I feel about that. Well, no, I marked the average here. I ended up marking the average up a little bit by selling and then scaling and selling and scaling again. You can see I've improved my average from where I started this short actually earlier today. So I'm actually short from about current market now that I've done some scaling and adding, scaling and adding, scaling and adding. It's marked up the average just a little bit from where I originally started the short. Another way that you could do this would be to look at maybe buying some cheap SPY puts or something, right? Just go out to the end of this week or next and find something for, like $1 and give it 20% worth of theta burn to see if you, happen to, be right. But do I have, I don't really have a trigger on the short yet to actually justify the short just yet. It takes breach of Friday's low during this RTH session. It takes a breach of Friday's low to trigger off the short, Friday's high being the risk associated with that idea. The targets on that would be back into, at least 100 lower. And honestly, hopefully, if I can really get something going, it'd be better than that even. That's best I know answer question number one. Can you interpret rebalance infos? This mean we should get rid of the 7 stocks, etc. So, Nancy, on the rebalance. All right. No, it does not mean that you should necessarily get rid of the 7 stocks that, that have been, performing and doing well. Doesn't necessarily mean that. But What I'm watching for is actually probably best illustrated on a daily chart here. If I can show you this screen. What I'm watching for is some change of behavior here, wherein it appeared that we were maybe onto something back here a little earlier in the advance in the Nasdaq. What I'm watching for is a change. Is for this to start to show me signs of a no longer lead, which has been, but no longer lead by the Nasdaq. It starts to stall and maybe even stall and start to pull back a little bit while someone else has a chance to take over. And I believe it'll be the Russell, by the way, have a chance to take over and start to take the lead, where the rotation, then we can see a stalling of the advance in the tech sector, which has been the lead horse, but it starts to stall. And relative then to that other performance elsewhere, it will start to underperform the then relative performance by the new lead horse that will start to play catch up. And I got a feeling that that's going to be in the Russell. So, and for example, here's one way to kind of look at that. Look at the high for the move on Friday was refuted and sold down to the lows for close in the Nasdaq. Now the advance in the Nasdaq is about half of, say, Friday's range, while there's a new high for the move in the Russell, right? So there's an advance here in the Russell where it's up 1.29% today versus half of that in the Nasdaq. So what I'm watching for are signs that the rotation's out of a previously lead horse. It won't necessarily have to go down. It'll just underperform relative to the new performance by the new lead horse. We have to figure out what that is. My anticipation is it's going to be the IWM. What do you do with that? Or the RUT or the Russell, or however you want to look at it. What do you do with that? Go to Yahoo Finance, pull the type in the IWM and get the top 15 stocks that make up the IWM and start to concentrate on those. Be my advice on that. That's what I've done. And then go pull a year-to-date performance on each of those 15 top IWM holdings. It's really impressive, by the way. Anne says the market's not been paying attention to the Fed all year. It's going up as the Fed's been raising rates, etc. Okay, I'm not going to argue that, and that's not even that's not really even a question, right? You didn't ask me a question, but I will say this about that. The Fed has been very open and transparent about exactly what they're going to do. Not that, okay, here's what we're doing right now. They've said from the beginning in advance what we're going to do. And the market is forward-looking 6 months plus at least, right? Well, the Fed's been very transparent about here's what we're doing. Here's the schedule that we're on. Here's what we're doing. We're going to shrink the balance sheet with QT on this much per month. And by the way, we're simultaneously raising rates to approximately here. We're going to get there on this schedule. And even to the tune of they're right now saying we'll get 2 more rate hikes this year. It's a lock. You know it's going to happen. They've told us what they're doing from the very beginning. So why would it all of a sudden be different now? And so the market's able to track and perform based on what it knows it's looking at without an unknown. The market doesn't like unknown. It's if it can know what it's dealing with. Right now, the S&P at 4550, where it is right now, is pricing at a 19 multiple. The 500 stocks that make up the S&P, it's at a 19 multiple, which the market evidently thinks is okay and fair. It's high, but it's okay and fair per the earnings information that we currently have. That's what we know. That's what everybody knows. That's what we got to deal with right now. Anything else? Social comments. Huh. What about, okay, so an individual ticker? Palo Alto. Let me start on a little bit higher time frame. What I've got right now is a long setup that I can explain on a couple of several different on the daily chart for several different reasons. But let's look at a weekly first. That's interesting. I actually really would prefer to see a little bit deeper on the weekly, to be honest with you. I just wait on this. I've got a long. The weekly tells me to wait. The daily's got a long setup for a couple of different reasons. So this trade that I can point out to you right now, maybe it's good for $10 or something. I don't know. But what I see is, one, it's the maze method that we discussed last week, and that is the pullback on an orderly kind of a basis anywhere between the 20 and the 50 without closing below the 50. And you pick your spot in there anywhere. It's at the pretty much the midpoint of the 20 and the 50 at the low of the move there at like 230 on what is also an inside range candle on the daily. So we're for the move, you got this move down on, and then the observation of an inside range candle, which is the beginning of a sneaky setup. It's a setup that we do in the trading room all the time. Additionally, the fact that this range candle, this extensive range candle that preceded the inside range candle, makes it not only your garden variety sneaky setup, it makes it a special one that we endearingly refer to in the futures trading room as a FUBAR sneaky. Yes, the acronym, you know the one. So with this inside range candle, what we do with it immediately when we can observe this setup is go against the nature of the extensive range candle as a knee-jerk reaction candle. You go against it on the immediate open of the candle that follows the inside range candle. The inside range candle follows the extensive range candle, right? The wide ranging candle. You say, what do you mean wide? What's wide? How do you know what's wide? We like to say 2.5, 3 times the average ATR of the candles that preceded it. If it can qualify, then it's FUBAR. And if it is, and you get an inside range candle, then you have a FUBAR sneaky setup, which means that immediately on the heels of that, you go long or against the FUBAR candle on the open, which would have meant Friday morning, you're long from the low, 238, currently $10 higher at 248. Not bad with no heat. That's a daily setup with the maze setup, the moving average zone entry, pretty much the middle of the 20 by 50 moving averages. And for that reason, that's a long on the daily. The weekly argues that this uptick fails and rolls and comes in a little deeper, at which point we'll grab it again at a better price a little later in a couple weeks. We'll grab it lower in a couple weeks, I think, on the weekly candle. The weekly chart doesn't look as good as this. So that's really about the best I think that I probably got for you on that. What candles your red and yellow green candles? It is let's see on here. Oh, 10x candles, simpler tradings, 10x candles. It's measuring volume participation on either of these up or down days. And when you get a greater than 50% of average volume participation on one of these days, it happens to be a green up day, it's going to be green. Then you get that little dot and it's telling you that the volume is really substantial, i.e. there's a high level of participation. The same is true on the down. You got this down tick right there with the little dots there. That's telling you that volume is excessive on a down day, and you'd probably be looking for follow through there. That's what that's saying. So the So it's a trend candle on one. It's red is bearish, obviously. Yellow is going to be neutral, and then it flips to green, bullish. So as long as they're, green, then you're probably leaning long. You're looking especially for those dots to populate to show you that there's a high level of volume and, participation, in addition to the fact that it happens to be a either green or red trend candle. Simpler trading's 10x trend candles. Nancy, since the market was stronger than what the Stock Traders Almanac predicted, i.e. sell in May, didn't work. Do you think that this time it's different for summertime? I don't know. I personally, Nancy, I think the whole sell in May is a crock of crap anyway, and that's putting it nicely since we're being recorded. But if you can read between the lines, you know what I'm really trying to say. It's a waste. There's no look. Go back on May for the last how many years you want to go back and look at May, and it's a load of crap. It's not worth any observation. But this particular summer, maybe, I don't know. I don't necessarily buy into it. I think while anything's possible, here's my main issue with the whole deal, and that is that this market is up 17.5% in the first 7 months of the year, and I know the average markup is 16 on this particular year. That is a year following a bear market last year. And so it's already, well, let me say it another way. I put on 44.25 SPX butterflies for end of year, and it's 45.50 right now. 44.25 SPX butterflies for end of year. It is 45.50 right now, meaning obviously I've guesstimated the performance or strength of the market. Or you could also say that I'm forecasting in that trade, because I've got money behind that trade. I'm forecasting in that trade that this market is overcooked at these levels and very well could stand to breathe and settle down into the latter part of the year, not showing performance like to the extent that we're seeing right now. That here, I've got a chart for it. Anybody, you pick a ticker, and I'll give you the relative performance of whatever ticker it is you have in mind. But I'll start with the SPX and the Qs, etc. So here's your 17.5% year to date in the SPX. Here's your 44% uptick. Let's call it 43.5. Here's your 43.5% uptick in the Qs year to date. Year to date, okay? That's starting since Jan 1 is all, right? And then the DIA is 4.5%, and the RTY is, I'm sorry, I have to go. Well, let's just do IWM. IWM is about 12%. And you want Tesla. Tesla is 172%, 171.5 to 172%. NVIDIA is going to be much stronger than that. NVIDIA is 195 by 240. I don't know actually where to put that. Hang on. $220, call it. At the highs, it was up 234%, but currently it would be up 222% on NVIDIA. But that's, you can see how widely that fluctuates, right? Just last week, it was 200 by 234%, currently at about 222% on NVIDIA year to date. Here's the chart. Actually, let's share the chart. Everybody that's got TOS, now has this chart with that share link. And let's see, what's the other ones? CRM. Salesforce is, I'm going to have to zoom in. 70%. I was going to 69 and 3/4. Let's just call that 70% year to date on Salesforce. So we'll see how the day finishes, but the question that led us off was, what do you think about the ES or something, SPX, any of that for the rest of the week? The decision will be made a lot closer to the end of the day. I told you how I was leading into making a decision and coming into today, and that is observing all the things that I just mentioned, and that is even including, remember some of these numbers. Last week alone, the NASDAQ tacked on 453 points, 3.3%. The S&P's tacked on 106 or 2.4. Russell 66.5, 3.56% in 1 week. And the Dow 774% or 2.3%. So, that's pretty strong. But it ended the week on an excess with a reversal day and a weak finish. Highs for the move made on selling. So if by the end of the day today, this thing finishes with a lower high, then I've got something to lean on in looking for very soon. And we'll get the answer. Let's see. We'll get the answer. When and if we see a breach of Friday's low. So one more potential setup that could be, but it requires that today not make a new high, okay? Cannot make a new high today. So let's go about this as though today does possibly happen to finish with a lower high versus 61 high of Friday, right? Then what we have is an inside range day today, which means that I will then use this day today as my inside range day and looking for a potential for another kind of short setup, which is a sneaky setup, which means that I'll use tomorrow's high, Tuesday's high as my gauge. Wednesday must finish the day with a lower high as compared to tomorrow's high, my gauge. Tomorrow will be the gauge, the high, whatever it is, higher high, lower high, inside, the same high, it doesn't matter. The gauge tomorrow, the high, what is it? Wednesday finishes with a lower high than today's high. Thursday is short against the Friday's high up there at 60.5. That's another short setup that could be setting up. I don't know until end of day today, and we do not have a higher high than Friday's high. Friday's high is very key. Finish today with a lower high than Friday's high, we have all kind of stuff that could be setting up. Take out Friday's high today, all that I just said is off the table, and we have to wait for a brand new setup. I'm currently short from market right here. I started that campaign lower and have scaled and added to get to where I'm short from market now. At these prices right here, 51 and 2. And we shall see. Netflix and Tesla will tell us where the Qs go. Yeah. And we will learn that on Wednesday. But we don't know that today. I'm short a bunch of Tesla puts, but they're worthless. I sold them for $8. They're at like 25 cents right now. In fact, I think I'll cover them today for a quarter and just be done with it. I had the intention of running them into the ground, but I don't see why I'm going to sit on 25 cents for 4 days because they expire Friday. Why in the world am I going to sit on 4 days worth of volatility in Tesla for 25 cents? So probably close them today. All right, that was our AMA for today, and that's what I've got for you. So hopefully, bid you farewell. For those in the YouTube screencast software stuff, if you want to join us, we're at simplertrading.com. I usually spend most of my day in the futures room, although I am in and out of the training room as well as the options room. We have rooms for options, futures, stocks, etc. Love to have you come join us there. For those in the training room, I think most of you know where you can find me most of the time, which is in the futures room. However, obviously, once to twice a week, I come in, poke my head in here, and join you here for a little catch up. Glad to be with you today. Thanks for listening, and catch you again soon. All right, good afternoon. Hope everybody's doing well. This is Neil.